Hey, it's Clay Trader, and this will be a video chart on NEOM, Neo Media Technologies Incorporated. Done this one a couple times already, and I want to get it updated here as we're approaching a pretty important area on the chart. Got a little nice candlestick today, so I want to get this highlighted, and that way I can fulfill all the requests I've been getting on it too. So looking at this chart, it is in an uptrend since about early September. And two ways of looking at that. First one, if you just scope out the lows, you can see we had a low here, then had a low there. You could, I don't know how intricate you want to get, but you could say low there. Or you could just simply look at the 50-day simple moving average and seeing that this has now begun to slope upwards like it has. That would be your other indication that, kind of the overall trend is bullish and is going up. Now, if you're a day trader or short-term swing trader, the past few weeks action, that's not what you want to see. But from an overall chart perspective, the trend is still up. And once again, I say that by just taking a look at that purple line there, the 50-day simple moving average. Now, the key thing that is happening on the chart here is the price is getting, well, it's already at 1, but it's nearing both of its key moving averages in the medium to longer term, meaning the 50-day and this orange line here, the 200-day. You can see today that the chart got a hammer candle, and being that it was formed right around this 200-day simple moving average shows that it could potentially be a bottom. Now, I say potentially because all candlesticks that indicate possible bottoms require confirmation. Just because you get one sort of candlestick doesn't automatically mean that the price is going to shoot back up or anything like that. It requires confirmation. So that's going to be what I talk about mainly here in this video, is what you want to see in regards to getting that confirmation to show you that maybe this is the bottom here. Two key things that should be watched for, in my opinion. The first one being just simply watching the high of today. Lots of people will use, traders, chartists, the high of any sort of hammer candle or bottom forming candle to kind of signal the first bit of true strength possibly be behind it. So here the high is at 0.0149. So what I'm going to do is change that up to a skinnier line and make that red, just because, yes, it is a resistance level, but it's only a small indicator of the strength behind any sort of move up. The next level to watch, and this is one that I would put more significance on, is this maroon line here, the 20-day simple moving average. Right now that is valued at 0.0164. So let's say tomorrow you get a nice day and the candle closes up above both of these right now resistance levels, but if that happened, it would turn them into supports. But let's say it closed up there, and also let's say you had some pretty good volume down here. That would be very confidence inspiring in terms of showing that this is probably the bottom and that the bulls are kind of back in town to push the price back up. Now, does it need to do something like that in order to give everybody confidence? No. It could go sideways a little bit more and then start to head back up. But the point being, you want to see the price get back above both the high of this candle here, but more importantly, the high of this 20-day simple moving average. This one hasn't begun to curl down yet, but it's it's no longer increasing; it's flattened out here. So the sooner you can get above that line, the better in terms of what the chart would look like. Now, let's say this isn't the bottom; this is just a fake candle, and the price continues down and closes below this orange line here. Well, like I said, not too far beneath, you do have the 50-day, and this is kind of the do or die support level in a sense, meaning you don't want to see any closes below this level. If that's the case, then that's just showing that there's just too much downwards pressure, and that's not what you want to see in that sort of situation. You want to be able to see obviously preferably the 200-day up here hold, but if that can't, then you really do want to see the 50-day hold, because that would be a sign that the bulls still do have some strength left in the stock. And with anything, volume analysis on these sorts of plays is very important. On any sort of down moves that force the price down, you don't want to see any sort of big red volume bars, like anything like that. But any sort of upwards moves where the price makes a nice move to the upside, the bigger the volume bars, the better. You can't have volume bars that are too big on up days. So keep that in mind. Watch the volume. If you're getting movement in either direction and the volume staying the same, that just makes it a little bit, tougher to call what's really going on. But you can't discount volume. You're going to have to keep an eye on that and watch it. So in a nutshell, possible bottom here, but in order to watch that, keep an eye on the resistance levels, see if there's any follow-through strength. And if it doesn't hold here, then you do have the 50-day, but that's where you really want it to hold. So if you do have any other questions on the chart, please shoot me a message. I'd also encourage you to check out bullmarketnewsletter.net. If you go there and sign up for the newsletter, you'll be sent a free ebook, which has been getting very good reviews. Goes over tips and strategies on how to profit in the market using charts. And then with your subscription, you'll get chart setups, trade ideas, educational pieces, everything from penny stocks up to big board. So there's a nice variety, something there for everybody. And it's all free, no strings attached. So I'd encourage you to check that out. One more time, this was NEOM. Thanks for listening.